Hi guys, in today's video, my main objective is to help you in choosing high probability fair value gaps in your day-to-day trade setups. So let's get straight into it. Now, when the market makers execute their positions, price tends to move significantly in a particular direction without offering fair value to other market participants. Now, this move leaves behind gaps which the trading algorithm later reprice to in order to offer fair value. Now, how do we identify these gaps? Now, it is a great candle formation pattern. In a bearish scenario, it is formed when the low of candle 1 do not overlap with the high of candle 3. Now, when you when we look at this image here in a bearish condition, you realize that if we consider this to be our candle 1, this our candle 2, and that's our candle 3, you realize that the lower wick of candle 1 is overlapping with the upper wick of candle 3. Now, with this, that is where in a bearish market scenario, market quickly comes back to reprice to fair value before going lower. Now, when the wicks of candle 1 and 3 do not overlap, that is where an imbalance or these fair value gaps are created in the market. Now, when these gaps are formed, we are expecting that price will come back to these areas in a later time to offer fair value. So as you can see here, the lower wick of candle 1 didn't overlap with the upper wick of candle 3. So we realize that price came back later and then tapped into this gap created to offer fair value before descending lower. Now there are other things you have to also consider in choosing high probability fair value gaps. Now, one of them is forming within premium or discount levels. So in this case, when you are in a bearish market condition, you are expecting that bearish fair value gaps should hold to send price lower. Now, it also occurs after the formation of a high probability order block. Now, at this point, let's cast our mind back to my previous video on high probability order block. And in that particular video, I made mention of the fact that these high probability order blocks are areas where the market makers execute their positions. And when these positions are executed, you realize that there is injection of volatility into the market. When this volatility comes into the market, that is where we find these gaps being created. So in most cases, where you find a high probability order block, you realize that it will be linked to a high probability fair value gap. Now, you should also align these fair value gaps with your higher time frame narrative. What do I mean by this? If you are bearish on a higher time frame, you are expecting that bearish fair value gaps should hold. In the same way, if you are bullish on the higher time frame, you are expecting bullish fair value gaps to hold. Now, let's consider some chart examples. This particular chart is the same thing that I used in explaining high probability order blocks in my previous video. Now, as I made mention, where you find high probability order blocks, it is very likely that you also identify high probability fair value gaps within those areas. So as you can see here, this close candle was the last candle that took part in our liquidity rate over here. Then when this down close candle closed below the opening of the last close candle, our high probability bearish order block was formed. And as you can see here, there was a fair value gap that was created within it. where price also came back later to respect it. Now, the same way, after taking out this buy side liquidity here and we descended lower, another bearish high probability order block was created here. And as I made mention of it, high probability fair value gap was linked to it. As you can see here, this is our bearish fair value gap, where price later came back and consolidated within before moving to our higher time frame draw on liquidity. Now let's consider another chart example. Now in this case, this is our high probability order block, and then when it injected the volatility into the market, you realize that there was a bearish fair value gap that was created, and then price came back, retested that area before going lower. Look at this side also. You realize that this bearish order block, that is high probability bearish order block, also created a bearish fair value gap, and then price once again came back there to respect this area before finally moving towards our higher time frame draw on liquidity. So that's basically everything I can provide you for now in choosing high probability fair value gaps. If there is anything you didn't understand with this video, kindly leave a comment below, like and also subscribe to this channel to help in its growth. Good luck and stay safe.